All right, what's happening, Limitless fam? Welcome back to another setup here, especially for you, getting ready as always, 8 a.m. EST for your morning coffee and the best possible setups for this week. My name is Lorenzo. I'm an executive trader at Limitless Trading Academy, and I'm looking forward to share with you an amazing analysis for this week right here. Hope you guys had a good weekend. We enjoyed it, but now, as always, guys, it is time to get back to work. So without further ado, it's time to take some action here and let's dive into the news. Due to the fact that this is a little bit of a different week, guys, do take consideration that Friday we have the Thanksgiving Day early closure at 1 p.m. Okay, do take that in consideration. 1 p.m. early closure, so the week is gonna be a little bit compressed. Okay, we combine that also with the existing home sales tomorrow in combination with a report that comes out every single month. We call it the FOMC meetings report here about potential, monetary policy statements right here. Okay, so every month, guys, you see already 21st of November, we will have a report coming out about the most important future interest rate decision. And because we're heading into the yearly closure right now, this might be an extremely important week due to the fact that we know exactly how the yearly is going to close right here. Also take consideration that companies right now are closing down their portfolios. They're switching things up in their portfolio as well as they have to file taxes as well next year. So people are already starting to close and open new positions, new hedges. So it might get extremely volatile early next month. Okay, so I'm talking about the last 10 days of this month and the first 10 days of December, okay? But without further ado, guys, let's dive into the charts because I have a bunch of setups for you guys here today. And one of them, of course, is oil, okay? Look at what happened here. Look at what happened here. We talked about this one the whole week last week, and we said we wanted to see oil coming down, right? So after that move that we saw here, back towards the $80, where we got rejected, where we had that little trade from around 77 all the way up to 80, we said we're no longer going to buy on a pullback. We are going to wait for price to move further down, and we highlighted this particular range right here. So if you look here right here, guys, back at that range, this is where we are right now. Keep in mind, I broke my hand with boxing, so I might be a little bit, you know what I mean? All good though. We're here right now, 77.847. Look at how we reacted, guys. Extremely strong reaction. So if you took an entry from the $74, congratulations, that was the sweet spot. However, for you right now, is it too late to buy oil? Well, let's go to the 1 hour chart here, okay? And let's dive a little bit back, because do you remember, guys, what we said on a Friday, okay? We were right here before on a Friday. We said price is gonna potentially move up. Big chance this will happen here, and we did that directly, okay? However, we also said that what we wanted to see was right here, guys, and this is super important. We wanted to see this high getting taken out, okay? This is what we have done already. We came up, we came back, pulled back into this area of the month right here, a very small zone right there, and we perfectly retested it and continue with the journey up here. So what we're looking for right now, guys, is if you want to look for new entries right here, I'm going to wait for another pullback, okay? But I just want to show you the potential, okay? We talked about the $90 here for oil right here, okay? Bunch of setups, by the way, guys. We're going to talk about gold. We're going to talk about a lot of other setups in a second here. But look at what we're seeing here, guys. We have this one. Beautiful trend right now. We're right here getting to that breakout point for oil as well, okay? We still have this high, all right? So a pullback internally is still a potential scenario. So where do we want to buy oil? What I'm personally looking for here is when we pull back, okay, is to draw the Fibonacci right now from swing low to swing high, start accumulating more of my position. So for example, first position taken at 74. Right now we have broken the highs. Any pullback around the 75 or to the $75 for me is going to be a nice potential add-on for oil to look for further continuation, creating an average order position right here. We talked about it before. I never put all my eggs in one basket, especially not on the higher time frame here. But the reason why it's so important to look at the higher time frame right now, guys, is because we just opened the week. Okay, so whenever you are, starting out on the weekly close, or so the weekly open here, and you're trying to see, okay, the weekend the markets were closed, I'm trying to go back into the markets. Maybe you took a day off or something. Maybe on a Sunday you were like, let's evaluate for this week. Usually what I tend to do is I try to stick with the higher time frame, okay? And I'll explain exactly in a second why that actually is here. So one more time, looking for a pullback, 50% potentially coming back towards the 75, $75.5, the equilibrium or lower, potentially even towards that beautiful zone here between the 62% and the 70.5 here. If we pull back, guys, we might see something very, very beautiful happening here. So we have a nice area of the month right here as well here. So this is where I'm going to potentially look for stacking up some of my oil position. And the reason why, guys, is I believe still, like we said before, that there is a big chance we could break it. We could come up here, we bounce, we have accumulated what we needed to accumulate right here at the $74, potentially coming back towards the $90 in the medium term, okay? That means a breakout, that means coming back towards that higher range for oil. Very, very excited here, so congratulations if you took a position there. Now, next up, let's look at the dollar, okay? And this is important for us right here, okay? Especially if you're a gold trader or you are, a Forex trader, whatever the case may be. I think it is important to mention that the dollar right now is back at the weekly support. And I'm talking about the weekly Fibonacci, okay? So keep in mind, guys, very important. Number one, we created this low right here, okay? Broke the low, immediately broke the high. That could turn into a continuation for the dollar right here. And keep in mind, this is on the higher time frame, all right? So there's a lot of variance here, but the fact that we are now breaking structure below, above, and now pulling back to the 50%, and we're seeing a reaction from it, is, in my opinion, a very good start here for the dollar, okay? So what we're looking for, like we said before here, we came back towards the 103.45. We talked about this one, the 103.45. Look at where we're reacting from. So far, so good, okay? So when we understand the dollar index, even if it's on the higher time frame here, fantastic beginning of the week, the open, and so on and so on. Now we can go and look at some other charts, some other pairs that are potentially correlating or negatively correlating with the dollar, okay? And I'm gonna go into gold in a second here, but what's important to mention is that we have right now the euro against the US dollar here. And look at what we're seeing here for the euro against the US dollar. The opposite, right? Negative correlation. We have seen that higher high. We have seen that lower low, okay? We talked about it last week as well. The euro index was in weekly resistance, okay? We're heading now into weekly resistance for the USD. So combine that with potential support from the dollar, and I do see something extremely interesting. But this is where it gets interesting, guys, okay? So we broke through the 50%. Completely fine here, okay? The 618 is right there, if you guys can see that, in that small gap above. And I'll tell you why this is such an important level to look at in a second here. But this is the high, this is the low, this is a lower low, strong continuation to the downside, now pulling back towards the 618 here on the daily chart here. So if we take this to the 4 hour, okay, look at what we have been creating. An absolute beautiful, beautiful parallel channel here, okay? You guys know I like to use them with supply and demand, horizontal support and resistance, you name it. I try to bring as many confluences together. And what we're currently seeing here is confluences coming together, okay? What are we talking about exactly? Well, let's have a look at this one right here, okay? Multiple touch points, number one, right there. So this is number one. Number two, we found support there, we found resistance there, we found support there, we started to range till we tapped into that zone here, came up perfectly, tested the highs right there, okay? And now we're pulling back up. So we actually bounced around the 50%, and now we're heading towards that level that I'm personally looking for, and that is the 109.6. It's the 618 on the daily chart here for the Euro USD in combination with that parallel channel right there, okay? So pay very close attention towards that level. As you guys can see, we should zoom in a little bit more here. So let's zoom in towards these candles right there, okay? What do we see here, guys? Very important. Very weak wick, okay? Very weak top wick right here. I do believe that if we pull back up here, the dollar comes down a little bit. Keep in mind that Monday is usually the time where we reflect, okay? Where we analyze, where we are patient enough for price to develop the new weekly candle to open up. so we then can decide on a Tuesday where we're going to take our positions. And so far so good. I think we are aligning very well here because we opened bearish for the USD. You see price pulling back a little bit, but with a very weak top wick. And whenever I see something like that, I'm like, this could be flipping. Okay, this could be turning. So either on the lower time frame, we're looking into potentially a solution where we're going to look for a potential short-term long entry if you are a day trader or a scalper, whatever the case may be. But in essence, what I'm personally going to do here, I'm going to wait very patiently for price to pull back up towards the 109.6, okay? If we see a very clean reaction from this on the 1 hour, on the 15 minute, then I'm going to take my position here because I think that the risk to reward of that trade setup potentially could play out very, very well, could be in our favor as well right here, especially if we see a very, very nice closure, okay? Euro USD is looking absolutely amazing, guys. Don't miss out on it. Keep a very close eye on this one in combination with the dollar. It's really, really nice what I'm seeing here, okay? Now let's dive into gold for a second because we had two solutions for gold here. Number one was that gold came back towards this strong area of supply back at around the 2005, okay? That was the initial reaction here. However, we did came up, okay, because we came down here at first, we pulled back up the last week, but we tapped into this high right there, okay? And as you guys can see here on the daily for gold right now, is that we broke structure to the downside and that we pulled back in towards this particular high right around the 1985. Okay, so keep a very close eye on the daily area of supply right here and that reaction right there right now. And the reason why there is a chance of potential, further continuation into that gap, which I'm going to target right here at around 1950, is because of one more chart that we're going to look at. Okay, and this is scenario number one, so do take that in consideration. I will also come back to gold here in a second, talk about scenario number two. But the main reason why is because number one, we have the FOMC statement coming out, all right? There is one chart that potentially could react to that, and that is the 10-year yield, okay? The 10-year yield for the US dollar here, strong negative correlation with gold. If this one goes up, usually gold goes down and the other way around, okay? Stronger correlation or negative correlation than with the dollar index. So do take that in consideration as well. Keep in mind that the dollar is also potentially now in that weekly support level, okay? So very important, this is the monthly chart, all right? And what did we do over this last month so far? Well, number one, we had a minor gap right in between, okay? So we're going to go to the low time frame in a second, but we had a minor gap right here in between. We did came down here, guys, to fill up that gap right now, okay? So we're talking about a monthly fair value gap or a monthly imbalance that has been filled right here at this particular moment just over the course of last week. If you draw a level here, you see perfectly that this is exactly what we were looking for, that potential fill of that gap. Now do take in consideration that we have 10 more days right now for the monthly candle to close. And we do not see a top wick on this monthly candle right here. Okay, we take that confluence very serious. We've seen these flippings happening over and over again here. So this could be something to take or pay very close attention to. So again, US government bonds 10-year yield, okay? Put this one in your watch list. Make sure you always be aware of the fact what's currently happening on this particular chart. It can give you a little bit more confirmation for when you're trading gold, okay? So do take that in consideration. So if we hold here, and we actually are holding support here, let's go to the 4 hour, and we start to push up, okay? Or we come back down one more time towards this range right here below, but most importantly, we start to push up from here. With the fact that gold is coming down here, let's take gold to the 4 hour right now. What is interesting to look at, okay? And this is where our favorite setup comes into play, all right? As always, this is what we're looking for. So number one, there we go. Let's see if I can hold my iPad. Oh, it's gonna be fine, okay. Consolidation, expansion, lower low, retracement, back towards the highs right here, okay? What do we see, guys? And this is always what we're looking for. We're looking for a fantastic volume profile, okay? And the reason why is because we have a beautiful, beautiful range to take into consideration. So number one, we draw the volume profile, the fixed range volume profile from the left to the right. We're coming up, and there is one level that is extremely interesting right now, and that is the value area high. You guys can see it. Hope you guys can see it right here, but this is the point of control. It's that red line. Above there is the value area high. Above below is the value area low. If you want to have more information about what it is, how it works, and how I use this on a day-to-day basis, then look potentially at one of my videos here, the only indicator you need when trading gold and Forex. Highly recommend to do so, because I talk a lot about this specific tool. You can also go back to the live streams to see when we actually executed a live position with this strategy as well here. But keep in mind, this tool is extremely powerful. Let's draw from the value area low right now a nice horizontal ray, okay, coming into that zone right here. Value area high, beautiful touch point, all right? Beautiful touch point. As always, we're seeing that reaction from the 1994, okay? We saw that rejection, came or aligned beautiful with an area of supply internally as well, the 4 hour. So what do we want to see right now? I want to see, of course, guys, very importantly, this low getting broken, okay? Give us that confirmation by breaking this low right here on gold, and then potentially breaking for the treasuries this particular high. We're talking about the 4.558%, okay? So 4.558% for the treasuries right here, and then potentially a breakdown of 1956 for gold, potentially pulling back, creating some sort of, and this is very important to mention here, some sort of head and shoulders, or what we can call potentially a retracement, pullback, and a continuation back towards this particular range right here, okay? So we could fill up that gap, but I do believe there is a short chance that it could potentially come down lower for gold in the very short term. However, I really want to see structure getting broken today, potentially below the 1956, if not tomorrow during the London Open, okay? This is what I want to see. Break a structure, pull back, potential continuation for gold to the downside here, okay? So USD, gold, oil, very important right here. Let's dive real quick into the indices, because something interesting is happening here as well, okay? We are still there, guys. We have still been ranging right now at these highs right here, okay? We talked about this one also last week a lot, where we came back into that resistance. We failed to break it. I am still waiting for a bigger move to play or to come into play here for the NASDAQ. And the reason why I'm still waiting is because I do believe that tomorrow, potentially with the FOMC statement here, we're going to see that move happening. And not only conclude this potentially from the news that's coming, but also from the volatility index, okay? And look at that, guys. Look at what we have been doing right here now on the VIX, okay? The VIX is showing us potentially a very nice buildup of something explosive. And whenever I see this pattern, guys, keep a very close eye on this one. Whenever I see the volatility index prepare, all right, compressing, potentially creating or showing us a chance of a future expansion. If this is to the upside, guys, and we start breaking to the upside here, the NASDAQ eventually will potentially tank, okay? There is a negative correlation between the indices here and between the volatility index. So whenever you look for a potential extra confirmation, keep a very close eye on the volatility index right here, okay? We have been closing below. Very importantly, we created this lower low. We did eventually broke structure right around there, okay? We broke structure to the upside right here, and now it seems like we are building once again potentially for another move here. So we're preparing for another move to the upside here. If we get that confirmation to the upside, man, you will see eventually the NASDAQ coming down, okay? And to just give you another example, okay? Volatility index here, NASDAQ right there, okay? Let me invert the NASDAQ for you right now so you get a little bit more of an understanding of what I'm talking about right here, okay? Keep in mind, guys, it's never identical, okay? It's not how it works. The way it works is we're looking for similarities, okay? The market rhymes. It's not the same, it rhymes, okay? What we're looking for right now is a potential breakdown for the NASDAQ while we actually break up for the volatility index here. So you see clearly that when we came down here, that move right here, that was that move that we've seen right here from the 15,500 back up towards the 16,000 US dollars here for the NASDAQ, okay? So we're very interested in looking for that breakdown. One more time, if we pull back here for the NASDAQ, what I want to see is in this moment, a clear break below the 15,785, okay? 15,785, put it in there. That's what I want to see getting broken, and I want to see us giving that confirmation coming from the volatility index breaking out of this structure, okay, that we're currently creating here. We're preparing, guys. We're preparing for something bigger, okay? That's it for the Nasdaq right here. Looks absolutely amazing, requires a little bit more patience, but inevitable, guys. We're gonna see an expansion happening very, very soon, okay? Beautiful stuff, beautiful stuff. Now let's dive one more time in the yen, all right? We talked about the yen last week. I think that was the biggest setup of last week here. We absolutely nailed that entry right here, where we saw that breakout happening from the yen basket coming up, okay? But like I said, the overall bias of the Japanese yen is still bearish, guys. So even if we take a short-term trade to the upside, we make some money. We had the perfect entry on the euro against yen short. Everything that comes down always, or everything that comes up progressively, can come down as well. In this case, for the yen basket, we are already now getting rejected back at this high at 6,720. Okay, so we came up all the way. We're now already getting rejected right here. So keep a very close eye on how this develops, because we might see a very beautiful reaction happening one more time on the euro against the Japanese yen here. Keep in mind, on the higher time frame for the euro against the yen, we're still bullish. We're still bullish. Even though we're coming down here on the higher time frame, we are still looking quite good. So this was our trade from last week. Beautiful. We said if the yen breaks out and closes above here, and we see that hourly closure here for the euro against the yen, we want to take a short position, okay? That's what we did. We took a short right here, stop loss above the highs, and we put and targeted this range initially, potentially coming down even further. We came up one more time, and boom, we dropped off again. However, now we're back, and let's zoom out a little bit, okay? I think it's always important to understand the higher time frame, okay? Look at what we're seeing right now, guys, and this is important to mention. Very, very beautiful. Look at the daily area of the month, okay? Strong reaction right here so far, daily area of the month. Keep in mind that the yen right now is in a 4-hour area of supply, okay? So Japanese yen basket, 4-hour area of supply. You see that the euro against yen right now is in the daily area of the month. So take this back towards the hourly. What do we want to see here? I want to see the yen, first of all, breaking structure to the downside. So number one, I want to see the yen coming down. And again, we can take our time, no problem. Let the trade develop over the course of this week. Absolutely fantastic. This is what we did last week as well. We're very patient, but we act as snipers, okay? What we're going to do is I'm going to wait for a breakdown for the yen, a serious breakdown for the yen, followed by a pullback, followed by a continuation. For the euro, waiting for an up move right here, looking for a pullback, looking for a continuation to the upside right here, back towards this particular range, okay? Back towards our initial entry at 163.847. I think we could make some sort of move back up. I think this range could be the range where we're going to find some support as well, okay? It's about price action. We have been consolidating, expanding, now pulling back. We could see another reaction from that particular range. So overall, I really, really do like what I see for the euro against the yen here, okay? Now, to finish it up, guys, quickly, let's talk about Bitcoin, okay? Bitcoin has not been moving. I'm going to give you the secret sauce right now, okay? This is what I'm doing. I'm going to wait for liquidity to develop. We have been doing this right now. We're still in the patient zone here for Bitcoin. We could find an enormous trade coming along soon, okay? What I think could happen here, guys, is that we shoot up, okay? And that we liquidate first the highs, one more time. I'm going to look for shorts above these highs here. So this might be a little bit of a unique approach right here. But what I've seen a lot here with Bitcoin is that many, many times over, they will not leave this liquidity building behind here, okay? So what I'm going to look for potentially is I'm going to wait for that expansion, 38.4. I'm going to wait for some consolidation. And if we start to show weakness, I'm going to enter a short position right here with a very tight stop loss, potentially looking for that turnaround back towards the lows. And I still believe it's possible, guys. And I'm going to give you one trick right now. If you missed Friday's session, we talked about one particular chart, okay? We just talked about the volatility index. We just talked about how we use this with trading the Nasdaq, the S&P 500, the Dow Jones. What about the Bitcoin volatility index, okay? So again, BVOL, that's a ticker, BVOL 24 hour, okay? BVOL 24 hour, this is what we're looking for. And look what happens. Every single time when we touch these lows right here, and this is where it gets interesting, guys. So one more time. When we touch these lows right here, every single time When we then break structure after that, we're going to see a big move happening. So in order to predict potential volatility for Bitcoin, we look at this chart, okay? So what I want you to do today is I want you to add this one to your watch list, okay? The BVOL 24 hour, okay? And I want you to highlight 2 levels. That's it. Put your alert. That's all I'm asking, okay? 296, 3.55. That's all I'm going to say. Put it right there, 296, 3.55 here. Put an alert. And the moment you get a message, that alert going up, keep a very close eye on the Bitcoin price to see what's going to happen. All right? And if it happens, let's have a conversation in Discord right here. We're going to head into the crypto VIP very soon here. Tim has been absolutely killing it. He's giving free signals in the Discord group right here where we have a crypto VIP. You can join for free as well. We have a session in about 30 minutes from now, right? 30 minutes from now. Or 50 minutes. 50 minutes from now. Okay. We have a beautiful session here. I'm going to drive straight into the crypto VIP as well with Tim. We're going to talk about the chart here. We're going to talk about this expansion. And after that, I'm going to head into the V324 with the family, with the V3 Elite. Shout out to you guys. Going to talk to you later today here. But overall, guys, this is just the beginning of the week, okay? Be aware of the news here. Oil is absolutely surging. Gold is coming down right now. I'm going to evaluate every single day right now the best possible setups for you. We're going to look at how this progresses over the next coming days ahead of us as well. Whenever we execute something, we're going to keep you updated. It's going to get wild. It's going to get interesting. The market is looking absolutely clean. Price action is looking fantastic. Okay, guys? I want to see you back tomorrow again. If you are committed, let me know in the chat right now that you're committed. I'm going to see you tomorrow, 8 a.m. EST. Looking forward to see you there. Crush it. Be aware. Keep a good risk management. I love you guys. See you tomorrow.